Earlier today, AppLovin stock hit its highest price in weeks. However, a very volatile market has dragged the stock back down. Even Nvidia, that just posted their most impressive financial results ever, has dropped significantly today on the back of Kevin Warsh's speech at Jackson Hole. But all of this might be providing a huge opportunity because for AppLovin, call contracts are outpacing puts and a surge in implied volatility suggests investors are bracing for a sizable move. At the same time, several highly respected analysts just reiterated strong buy ratings while also discussing some serious risks. In today's video, I will be looking at all of this. Before we get into it, if you appreciate these videos, then help the channel by leaving a comment and hitting the thumbs up. I really can't stress how important this is for a small channel like mine since YouTube's latest updates. Now let's get straight into it. AppLovin stock is one of the few small green highlights of the day as the whole market has turned red this evening. But there has been strong buying interest paired with elevated options activity since their earnings call. And this is driving a sharp sentiment reset as the market reconsiders a recent revenue miss against long-term ambitions for its AI-driven Axon ad platform. The long-term story here is huge growth, and I will be talking about this later in the video, but first I want to look at the latest analyst and institutional activity because it appears right now that everyone is bullish here, but the stock price does not yet reflect it. Looking at tip ranks, we can see that AppLovin is covered by 23 Wall Street analysts with a consensus price target of $527. There is no sell ratings, there is 5 hold ratings and 18 buy ratings, with price targets varying from as low as $325, which is just above today's price, up to a high forecast of $790. The most recent buy ratings and price targets have been set this week. A target of 475 set by Needham analyst Bernie McTernan, while Citi analyst Jason Bazinet reiterated his buy rating with a price target of $600. He stated that this buy rating is due to a combination of factors tied to AppLovin's accelerating client growth and improving international mix. He highlights that the number of e-commerce customers using AppLovin ads is rising at a faster pace recently, which points to stronger underlying demand for the platform. At the same time, he has noted that non-US markets are expanding more quickly than domestic, which is broadening the company's geographic footprint. He also observes healthy store growth across all categories, reinforcing the view that adoption is diversified rather than concentrated, and therefore supports keeping the buy rating and $600 price target. But it's not just a few analysts that are very bullish on AppLovin. The overall trend is bullish, and when we look at Fintel, we can see that buyers grossly outnumber sellers. Institutional ownership has reached an all-time high in the past few weeks, while the company's largest shareholders have been increasing their positions. In their recent 13F filing, we can see that Capitalwood Investors, which is the company's second biggest institutional shareholder, has increased their position by 156% recently, while FMR, their largest shareholder, also increased their position by 10% according to their latest 13F. But there's also sizable increases from several ETFs, such as the iShare Expanded Tech Software, which increased their position by 73%. Now, it's rare to see a stock that everyone agrees is a buy or a strong buy. But between analysts, institutions, and retail investors, everybody is rating this stock the same way. Looking here at Seeking Alpha, we can see that every article going back over the past month or more is rating AppLovin as either a buy or a strong buy. And while the stock has started to increase over the past week, there is still plenty of room left to go. And this is a great article here. It's the most recent and it's also the editor's pick. AppLovin, here's how I see 3 catalysts that could drive valuation re-ratings. And this analyst has called out AppLovin before, calling it out earlier this year as a strong buy when the stock was just $350 before it ran to over $600 during the summer. So looking at this, AppLovin remains a high conviction buy despite a disappointing Q2 2026 with robust catalysts for valuation recovery in the second half of 2026. Q2 missed guidance, But Axon 2.0, general availability, and e-commerce onboarding in Q3 are expected to drive reacceleration. App's expansion into e-commerce and connected TV materially broadens their total addressable market, supporting a $537 price target and 70% upside potential, trading at 15x full year 2027 PE and a PEG of just 0.6x. App offers asymmetric upside given superior growth, margins, and capital returns versus peers. Now, just a quick note on this. When we look at the consensus EPS estimates over the next few years, they have 15x estimate for 2027, but the growth is not stopping there. They're expecting forward PE for 2030 of only 10 and a forward PE of just 5 for 2035. Now, nobody cares about looking that far forward, but I just want to put this into perspective. For example, this week Nvidia had its best ever earnings call. Nvidia is heading for a 2027 forward PE of 24, with a 2030 forward PE of 10, just like AppLovin. The company has serious growth that the market is not fully taking into account, and this is providing a huge opportunity. So with a 15x full year 2027 and over 30% EPS growth and a PEG of just 0.5, KL Research deems AppLovin's risk to reward skewing to an asymmetric upside that justifies a bullish call. And we can see this continued growth here. This isn't just a one-off quarter, even though they missed guidance. AppLovin has been a cash-generating machine over the past few years. Now, if you'd like to see me make a video where I go through AppLovin's financial statements, their financial performance, and their latest earnings report with future predictions, then let me know in the comments. As always, you guys are watching the videos. You get to decide if you want to see something or not, so let me know in the comments. Anyways, moving on to the three catalysts. Catalyst number 1, the general availability ramp of Axon and e-commerce onboarding in Q3. Now, previously, Axon Ads Manager adopted a closed-loop model with referral-only access. However, with general availability of Axon's self-service campaigns from late June, as Axon operates on a direct outcome, return on ad spend orientated model, SMB advertisers could set minimum thresholds and Axon could auto-bid on high-intent inventory only when the model predicts conversion. This scales AppLovin's advertiser base and campaign participation, driving Axon's incremental data accumulation, model iteration, and improvements, delivering better user insights. Early performance indicates that the onboarding funnel currently converts roughly 57% of qualified leads into active campaigns, underpinning robust advertiser interest. Upcoming Catalyst 2 is improving seasonality dynamics. Obviously, heading into Q3 and Q4, seasonality really comes into play with the back-to-school season, Black Friday, Cyber Monday, and the holiday shopping in general. But here's the thing. Management has already confirmed that AppLovin's web and e-commerce advertiser spend stands 28% above its Q4 2025 peak despite weak seasonality in Q2. This offers substantial headroom for AppLovin heading into the strongest consumer quarters of the year. And Catalyst 3, e-commerce upside optionality. Now, according to Northbeam Media, AppLovin's budget share of advertisers is around 1.89%. Given the company's ability to grow at above market levels, such as the 30% compound annual growth rate, AppLovin's top line could reach around 20 to 25 billion by 2029, translating to a 3 to 4% share of the US advertising budget for the year. As KL Research says here, I deem this a reasonable estimate relative to competitors like Meta and Google, given Axon's strong return on ad spend. And then there's a breakdown here of how the author came up with a price target of $537 for AppLovin stock. Now, obviously, I've been skipping through a lot of this article because it's just not feasible to cover everything in such a short video, but there is a link to this in the description below, so feel free to check that out. Finally, the conclusion and risks. The risks of investing in AppLovin remain. Number 1, Axon 2's model upgrade delays. Number 2, high initial merchant signups but low long-term retention. And number 3, inconsistent return outcomes for the Axon model, raising SMB churn. However, KL Research deems these risks to be manageable and remains confident that investor sentiment on AppLovin will turn around in the second half of 2026 as management remains committed to scaling Axon to prove market doubters wrong. So this analyst maintains that AppLovin is attractively valued and it remains a strong buy. But what do you think? Drop a comment below. Remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. But if you enjoyed this update, then don't forget to smash the thumbs up. And if you're interested in me doing an AppLovin financial analysis, then let me know in the comments. Thanks for watching, and I'll catch you in the next one.